Hey, good morning, everyone. Marty Mazzora, August 2nd, 2019. Lot I can say about the market. I've been saying it on the written blog as it relates to tariffs and my thoughts that I know not all viewers appreciate or all readers appreciate, but so be it. We're not here to be political at PWA. In fact, those of you whose money we manage, you should be saying, thank goodness. You do not want your money managers viewing the world and the markets through any kind of politically tinted lenses, and therefore we don't. So I will continue to tell you why things are what they are and where the uncertainties lie and what it'll take for this market to legitimately catch its wind and its sails, its wings, if you will, so we can sustainably move into all-time highs. I don't know how many times I told you in here, in here, and in here, this is not sustainable amid the risk of global trade wars. And we're a long ways from that being over. It got exacerbated here yesterday, which took what was a nice green candle into a very red candle, and here we are now. So again, look for more of that on the written blog. As it stands right now, though, I want to talk to you about the technicals. Yesterday, I drew for you this line, and I said there's probably some stop losses in here that'll get triggered. Most of the day yesterday, boy, there was a real battle going on right at that line, and then we dropped down. After that video, and in a meeting that we had here internally, I drew for my audience these lines, and I said we're going to be looking at support and resistance levels getting challenged. And the next line was right here. And ironically, this candle, the shadow down below, that shows the intraday move to that level. And we bounced off of that, and we're kind of moving back in that direction. And that looks like about 29.17 or so, 29.15 on the S&P. Below that, I don't think there's much to hold the market up between about 28.60 and 2800. Key area right here at about 27.25, and then it gets really ugly below that. There's no reason to think we're not going to come down and test these levels when you listen to the rhetoric. Now, you know what yesterday's news was. September 1st, according to the president, 10% on everything else that comes from China that hasn't been tariffed will be levied with a tariff. Again, 10% on $300 billion worth of stuff that you and I buy. Now, the president this morning did say, and I posted this, that if China comes around, we may not have to escalate by September 1st. And I titled that one, Feels Like a Mexican Borders Strategy, or words to that effect. I don't know that that's going to work with China. China's really doesn't have as much at stake, quite frankly. You might think that they do, but they don't, as Mexico did at the time. And China's got much different political structure, much different political pressures, and they've been going at this for a long, long time. So it's going to be that's going to be tough to say. They were even conciliatory here this last week, but for whatever reason, the president decided to make that move yesterday. That move or that comment this morning almost suggests that he's surprised by this, and if he's surprised by this decline, that's scary, quite frankly. There was a rumor yesterday that I caught on Twitter that in about 45 minutes he's going to make an announcement about trade with the European Union. I haven't seen any confirmation of that, although I've been disconnected from most of the news this morning. But if he were to come on, and frankly, if he were to say that we're going to slap tariffs on German automobiles, we are going to see this market just crash right through these levels. I don't know that he would say that. I think this has gotten his attention. So if that was scheduled today, my guess is that's off the calendar. I can tell you this, the German trade team believes that on November 15th, the US is going to announce 25% tariffs on European automobiles. So we just have a lot of ugly stuff to come. If this market will punish protectionism between now and then, I think we can see it go away because it'll be very, very clear that it's going to be more politically expedient to knock it off. But up in here, there just isn't that. I heard Larry Kudlow today talk about how far the market has risen this year. What they're implying is that we have room to do this. Well, as we've learned the last couple of days, this market can fall in a hurry. We had a 500-point decline from where we were yesterday, just on that 10% tariff tweet. So anyway, folks, my point today is these negative divergences that have been there for weeks and weeks that I've showed you 100 times, they're all in place. The other day I titled my video, "This market is looking heavy to me." Again, a negative technical setup waiting for a fundamental catalyst. Well, we look like we're getting that. Could this thing come screaming back higher if we got some good news this weekend? Unequivocally, it can, because we're still in an economic expansion and we're still, by definition, in a bull market. And we're learning that bull markets are very difficult things to kill. But this one is being wounded. And my concern is the fundamentals underneath it are weakening. And so if it gets wounded too far, the fundamentals could roll over the consumer with it, and then we have a bear market. So we don't want to see that happen. I will keep you posted. Thank you, as always, for watching and listening. And of course, I'll be back very soon. Take care.